Hello, everyone. My name is Frank. I'm heading the investor relations activity at Mr. Specs, and I'm happy to recap our full year 2021 results today. Let's get started with a few highlights in a quite intense 2021. We were again growing double digits, to be more precise, 18% versus 2020, and compared to 2019, we were even growing at a very solid 39%. We also increased our active customer base and are now the third largest German eyewear retailer. And in sunglasses, we are even the largest retailer in the German eyewear market. On the tech side, our shop infrastructure was updated and the online eye exam was expanded to new markets. We also added a number of new brands to our boutique section in the premium and luxury segment. And that all happened on the back of a successful IPO mid of last year. Next to the technology investments, we also invested in more retail stores. We grew our retail portfolio by 14 stores, 10 of them in Germany, and the first 4 international stores, 2 of them in Austria and another 2 in Sweden. Now looking at the financials, as I said, we continue to grow double digits. It is the 13th consecutive year of double-digit growth for Mr. Specs in a quite challenging market environment. Revenue increased by 18% to 194.2 million euros, and the adjusted EBITDA came in at 4.1 million euros, in line with our guidance that we updated in early November. The numbers were impacted by COVID restrictions, which gives us 2 main challenges. One is retail traffic is still negatively impacted, and the other thing is quite high absence rates for different departments due to quarantine regulations. When we take a look at the key customer metrics, we can see that all 3 metrics improved. Taking a closer look at the active customers, we are talking about a 12% increase year over year and even a 25% increase on a 2-year stack. We have seen a similar development when it comes to the number of orders. The average order value increased slightly by 3%, despite the fact that we only had a minor uplift in prescription glasses, which is the category with the highest average order value in our product offering. We have a very solid cash balance of around 175 million euros, including 25 million euros that we have invested in monetary funds. Going forward, we want to invest in 3 main areas. One is the rollout of additional stores. We have opened 14 stores last year, and we will accelerate the pace of new openings to around 20 stores this year. We further invest into the digitization of the customer journey to improve the shopping experience and strengthen conversion rates. We will also invest in logistics automation. In 2021, we have automated the contact lens picking, bringing down costs per order and improving the overall margin development. The remainder is left for potential M&A opportunities, which would help us to accelerate our international rollout and expand our international presence or strengthen our tech leadership position. If we look at the strategic priorities for 2022, at the core of our value proposition is that smooth prescription glass journey. We continue to invest and deploy solutions for the seamless integration of the online and offline customer journey, including eye exams. We will further expand our store network with around 20 openings in Germany, Austria, and Sweden. At the end of the year, we will also open our first store in Switzerland. For those stores that we opened during the pandemic, we have initiated measures to create local demand and also manage store productivity in times of lower traffic. The third pillar is our leadership in content creation and communication. We are the most exciting optical retail brand in Europe, and we will continue to invest in content creation across the board and in our brand building efforts. We clearly want to be the leading home for fashionable eyewear from a consumer perspective. We work very closely with our suppliers to give them the environment they want to have for their brands. So the launch of our boutique section for premium and luxury brands is just one of those examples. And last but not least, we want to deepen the approach for very attractive target groups and by enriching the assortment in the luxury and independent segments, where we have seen overproportional growth over the years consistently. But we can feed that engine even more by increasing the targeting of that consumer segments. Coming to the major risks we are currently seeing. One is certainly the COVID development. We did not expect all-time high infection rates in Germany in Q1. This is not only impacting traffic on the high street and in shopping malls, but also our operations due to sick leaves in our warehouses and our stores, which we try to cover with temporary workers. In addition, we have seen a certain hesitation or a dampening of customer demand due to rising inflation. So how are we handling this environment? First, we decided to reduce our planned store rollouts from initially 30 stores to around 20 stores to protect our cash position. In terms of COVID, we expect that Q1 has seen the peak in terms of infection rates, and Q2 will be a transitional quarter before returning back to normal in Q3 and Q4. Depending on the further development of COVID, we might even ramp up the store rollouts, but for the time being, we remain cautious and plan with around 20 stores. We will also have dedicated store marketing. So we want to push and attract more customers into our stores, particularly also in our new stores that we opened in 2020 and 2021. Overall, we are also taking a close look at our lens pricing for multifocal and single vision glasses to remain competitive, but also increase prices if necessary. And last but not least, we will also work on improving the sourcing terms as we are continuously increasing purchasing volumes, providing us with more negotiation power. Coming to our outlook for full year 2022. Due to the uncertainties I just mentioned, we remain very cautious when it comes to our full year guidance. So particularly when we are talking about record high infection rates, which is clearly impacting traffic in our stores, but also in our own teams in logistics and retail due to quarantine regulations. For Q1, we are currently performing in a single-digit revenue range year over year. We expect an acceleration in revenue growth throughout the year, but currently it is too early to give a more precise guidance on the top-line performance than an acceleration versus the 18.3% growth in 2021. The same accounts for adjusted EBITDA, which is expected to be higher than previous year's levels, so higher than the 4.1 million euro that we shown last year. Also here, we expect to be more precise when we go further down this year. Thanks a lot for your attention. If you have any further questions, you are always welcome to reach out to me. Thank you.
Since you watched this company video until the end, I'm guessing you liked the video. That's probably because we work very hard to create the most engaging and value-added content possible for you. If you're a stock-listed company or corporation and want to find out how we at C11A can make a company video with and about you, please email us at community@c11a.com.